On the second one here.
Oh, there he is.
Now we can start. Now we have enough people to start. You know, actually, I do these review sessions instead of office hours, and I almost never do an office hour because only by appointment. So you have to talk to me. You know, I'm happy to talk to you. This just works so much better than than coming and getting one-on-one help. You end up doing the same thing again and again and again. So this way, everybody gets some access to it. So, and hear other people's questions. So it's all right. If there was one of you, it'd be fine. Right? Anyway, all right. So we're going to do Foxborough Company, the second statement there, and just give it a shot. So, and let's just walk through it, and I'll try to talk less and do one. Okay? Yes, hopefully follow along. This problem looks a little different, doesn't it? It gave you an income statement, but it didn't give you a balance sheet, but it gives you all the balance sheet accounts. So you can prepare a balance sheet from all those balance sheet accounts, couldn't you? Yeah. So you know what's on the balance sheet. And it gives you a little bit of information at the bottom for the things that don't actually show up on the accounts, which is typically maybe sales of equipment, maybe sell of investments, maybe dividends, whatever, okay? Things that have been happening. Okay, so if I was going to do a cash flow statement for Foxborough, where would I start? Write it down, right?
Probably sure the sound was on too.
Oh, maybe. Well, I don't think I turned it off. I think we're okay. Although I didn't test any of those other ones, did I? I'm sure. Might not be a bad idea.
So for year ending year 2.
Yeah, we just say for the year end, year 2 or something, is fine. Very loud. Now we go. Okay. All right, there we go. Okay. Oh, that was showing the other one. Now, why does it say lower cost or market? I just put that up there. Okay. That's a good idea, though. Check that. So the sound is working. We're still recording. Okay, so Foxborough. So we put in Foxborough Company, spell it out. And then we put statement of cash flows or cash flow statement, either one. Okay, and then we put for the year ended December 31st or whatever year end it is. And this just says year 2, so we'll just say year 2. Okay, but you put the date, wouldn't you? Okay? All right, so make sure you put that up there. There are 3 sections. The first one's going to be operations. So we're going to list all the operating stuff under there. What's the operation stuff again? Net income and current assets, changes in them, and current liabilities, changes in them. And then we're going to add back any non-cash items on the income statement, like depreciation and amortization. It's a real common one. There are others, but that's the only one I'll give you guys. And then, and that was always there. And then any gains and losses on non-current stuff is going to go in, okay? So we're going to do that. And then we're going to go down about half the page, and we'll put in investing. Okay? And it's not investments like somebody investing in us or us investing in another company. Is investment in general in fixed assets, non-current assets. Okay, yeah. But you said it right. It's fine. And then what? Down about a quarter of the page, we have financing maybe. And they're kind of upside down, right? Because we do the financing first, really, and then the investing, and then we run the business. But anyway, that's how we do it. And we're going to get a total for each of those. And then when we add them all up, what are we going to have? Change in cash, increase or decrease in cash. Okay, so change in cash, increase or decrease in cash will be the total of those. And then we'll add that to the beginning cash, right? And that will give us the ending cash. Well, we can get the beginning and ending cash right off the balance sheet, can't we? In this case, they gave us a trial balance, but that's fine. We don't care. What's beginning cash?
19,000.
What's ending cash?
11,000.
19,000. Is everything in even thousands? It is, isn't it?
Yes.
Okay, so okay, 19, ending cash is 11. Both of these happen to have a net decrease in cash. What's the net decrease in cash? 8. Could it be an increase in cash? Of course, okay? So my total is going to be 8, right? You guys good? And I'm going to call this a decrease in cash. If it went up, I call it an increase in cash. So always start with that so you know where you're at. Besides, I'm going to give you points for this, right? We're just getting it set up. Maybe we got 5 points or 4 points or 6 points or something. No problem. Okay? Then I'm going to split everything into operating, investing, and financing. We talked about what went in operations. What goes in investing? All the non-current assets, buying and selling them both. What goes in financing?
Non-current liabilities.
Dividends and like retaining earnings.
And equity. Yeah, retained earnings, contributing capital. Sure, you bet. Absolutely, you're right. Everything except for net income, because net income or net loss is going to go up here, right? Okay, it's going to be the first item under operations, so that's pretty easy to remember. Okay, so where do you want to start? Oh, by the way, you wrote cash down. What did you do next to cash on this problem? Put a check mark on it. Yeah, let's put a check mark down on cash because we analyzed the cash account here, didn't we? Okay, put a check mark there. I don't care where you start. You can go through account by account. You can jump around, right? If you remember net income goes first, you can put net income down first. If you don't remember when you get to retained earnings, you will remember, right? Because you'll be analyzing what happened to retained earnings, and of course, in retained earnings, it went up by net income, didn't it? Or down by net loss. It's kind of because of net income. So let's go through the accounts. Let's do the easy stuff first. Let's do accounts receivable. Let's do the current assets and current liabilities first. So leave yourself a little room for depreciation and amortization. And just in case you have gains and losses, leave a little more room. Okay? You might have, you might not have. And then put in change in current assets. And then down below, we'll put in change in current liabilities. Got the idea? Okay? So let's do them. What's accounts receivable? What happened to it?
Increased.
Increased by 70. I did not collect 70,000, so guess what? I have less cash. Increased by 70 is less cash. You guys good? Actually, I should have put it out on the column. I'm not going to do subtotals. So, increase in accounts receivable is 7. Okay? I have more cash. Whoops, less cash because I didn't collect my receivable. Right, guys? Debit accounts receivable, credit cash. Think of it that way if you want. Okay? But I just didn't collect all my sales. Is that good? Good. Put check it next to receivables. What happened to inventory?
Increased.
Increased by 48. Pretend you bought it with cash. I would have less cash, right? I buy the current assets with cash. Okay? Really what happened is I replaced my inventory with could use up cash, right? Increased it with could use up cash. Prepaid expenses, what happened to that? Down. If prepaids went down, I used them up. It's an expense on my income statement that used no cash, right? Yeah, but you can just pretend you sold it for cash. I don't care. 9,000. Okay, I have more cash because I didn't replace it. You guys good? So now put a check mark next to, you've got one next to cash, accounts receivable, and inventory, and prepaids, don't you? Okay, I'm going to assume that loan to Harker Company is a non-current asset. If it's to one company, it probably is. They didn't tell us. I should tell you on a problem. Let's assume it's non-current. Okay, if it's current, it'd go up there into the current assets, right? If it's non-current, where is it going to go? It's an asset. Under investment. It's that simple, right? Okay. So now, why don't we slip down to the current liability? Now, they put accumulated depreciation under credit balance, but that's because it's a credit balance. It's still a contra asset, right? If you do the balance sheet. Okay, so, all right, just how it's a little problem here. I don't know why they did it this way. Accounts, I like it, though, because it's different than the first one. So you just relax and find what you need. Accounts payable increased by 50. Well, let's see. That's a current liability, right? Increase in accounts payable. If your payables went up, you did not pay the bills, and you have more cash than if you had. You borrowed the money. You guys agree with that? So I have more cash by how much? 50. That's additional cash, right? It's exactly the opposite of the current assets, huh? If I have more of a current asset, I bought it in cash. If I have a more current liability, I borrow in cash, right? Liabilities are the opposite of assets. That makes sense? Okay, good. All right, and then accrued liabilities is also a current liability, and it went down, right? What I pay it with? Yeah, paid it with cash. So cash went out of how much? 8? Yeah. So now you can check out accounts payable and accrued liabilities, and we've nailed about half the accounts already. Okay? And now we can start doing harder stuff. Okay? And I still don't care which one we do next. I'm going to be ridiculous and leave net income to last, just in case you forgot. You forgot that it goes on the statement first. I'll show you that, you can find it. I could care less at what point you do it. You do it first if you want. But if you do net income first, what do you want to do at the same time?
The retained earnings.
All of retained earnings, which will then probably include dividends, right? Because you have 2 things out of retained earnings every year. So don't just do half of it, because you might get the other half. That's just a caution. Okay? All right. Not that it has to be done that way, it just keeps you from screwing up. So let's go down and let's say loan to Harker Company. Does it say anything about the loan to Harker down below in the dialogue? Now, the dialogue at the bottom will usually relate to the non-current assets and the non-current liabilities and equity. And the reason is you need the detail to do both increases and decreases, right? For the change in the accounts for the current assets and current liabilities, you just need the balances, so they don't usually say anything, they don't need to. So what happened to loan to Harker Company? Went from 0 up to 40. What's about that? Debit note receivable. It's an asset, right? Debit note receivable and credit cash. I bet I'll loan the money. So where would it go? Investment. Loan to Harker. Do I have more or less cash if I debited loan to Harker, note receivable, really, and I credited cash? You have less. Told you this is easy. You guys are doing the right thing too. You're working on it. Right while we went over it, right while it's fresh. Keep doing it until it's you just got it solid. Okay? Lots of points there. All right? So that's 40,000 less cash. Put a check mark next to loan to Harker. Why didn't I show both an increase and decrease in that? Because probably they didn't give any detail, so probably all they did was loan them the money. Figuring out what it must have been. What if I loaned them 100 and they paid me back 60? I would show loan to Harker for 100, and then payment from Harker for 60. Got the idea? I show both because not
That would both be under the investing.
they both go under investment. One would be an increase in cash, and one would be a decrease. Got it? Okay, good. Okay, plant and equipment. Now, when I get to something like plant and equipment, I know there is going to be accumulated depreciation on it, right? Okay. By the way, could it be separate accounts, land, building, and equipment, and have accumulated depreciation on building and equipment separately? Sure. I won't give you a problem that complex, but it's not really complex. It's just additional accounts. It's the same thing, right? So what do we have? Plant and equipment. Land, building, equipment, and accumulated depreciation, right? Let's write down what we know, figure out what we don't know, and get any cash flows on the cash flow statement, okay? All right, so this is where it starts getting harder. What did I start with in plant equipment? What did I end up at? 620. Would you guys agree with me that they bought at least 120? Yeah. Okay. You know what, if you go back and think about when you started this class, would you have known what I was talking about when I did this? Nothing, right? You can't tell how much you learn as you're learning. I swear, I knew everything I know now the day I was born. I don't remember where I learned anything. I don't care if you remember that you learned this stuff in this class in the least. I don't care if you remember me, although how could you forget? But, it's torture. But, really, that's not what matters. What matters is you have the knowledge that you've done and cares where it came from. Right? It doesn't make any difference. It really doesn't. It always amazes me when people say, well, who do you think was the best teacher you ever had? I can't remember any of those people. It was all painful, so, yeah. Besides, I get all the credit. I had some really good teachers. I could probably tell you what the best teacher is. I know I could, so I see lots. So anyway, accumulated depreciation had what in it? Oh, they bought what? They bought at least 120. But could they have bought more than 120? Yeah, sure, they could have sold some. The purchase comes in over here, right? The sale comes out over here. You guys agree with that? Would I sell something? I bet I retire the accumulated depreciation on it, if there is any, right? If there's land, there is none, right? If it's building or equipment, there probably would be. I usually don't buy a new one and sell it immediately. I depreciate it first, right? Okay, and then we'd increase accumulated depreciation for my depreciation expense, right? That's how this is going to work, isn't it? Okay, so what's my beginning depreciation, accumulated depreciation? What's my ending?
165.
And by the way, don't put the balance in accumulated depreciation over on the cash flow statement. Put the change in it due to depreciation expense, right? That's all that's on the income statement is depreciation expense, which is a non-cash item. Okay, so let's figure out what we've got. Down at the bottom it says equipment that costs 30, on which there was accumulated depreciation at 10, was sold for 26. Wait, the problems are similar. The equipment that costs 30, on which there was accumulated depreciation of 10, was sold for 26. Tell me what the journal entry would be for that. Debit what? What did they get? No, they gave up equipment. I don't want to debit equipment. It had cost 30 and sold for 26. What did they get? Cash. Debit cash. 26. Good. Okay, what did they give up? Equipment. What do you want to do to equipment? Plant equipment. Credit, excellent. See how this gets the earlier parts much more solid? By the time you can do this, you go, oh yeah, I do know this, I do know this. Okay, by the time of the final, you're going to feel real good. I know it's only a couple of weeks, but you're going to feel good. So, plant and equipment credit for how much? 30. But we had been depreciating it. So, by the way, that 30 there is included in the 500 I started with. Did you guys agree with that? Okay. And then also included in the 130 accumulated depreciation is what? 10, yeah. So 10 of that we no longer need because we got rid of the asset, right? So accumulated depreciation should be reduced. We already did these journal entries, didn't we? Back when we did land equipment chapter, right? Okay, now look at this. The book value of this asset, I'm taking it out of there. I'm getting rid of the 30 here. I'm just posting that in, right? That's the 30 here, okay? That's that one. And I'm getting rid of this 10. It's coming out of here. You with me? Okay. That 20 is the book value of the asset, isn't it? I got 26 for it. What happened to me? Ooh. I'm going to do that too, but that's separate. Just finish this entry first. I sold an asset that has a 20,000 book value. I put that 10 on the wrong side. Did anybody notice that? Come on, Keith. Yeah. Oh, you did? Okay. Oh, you said it's a debit. I got you. I thought you were talking about depreciation expense. Thank you. You're absolutely right. It's debit, right? Okay. So that 20, the difference between the 30 and the 10, that 20 is the book value of the asset, isn't it? And I sold it for 26. What does that mean? You have a what? Gain of 6. Absolutely. Gain on sale, right? Of 6. That gain is probably on the income statement. I look at the income statement, there it is. Gain on sale of equipment of 6. It's down there with the non-operating items. Thank you for that, by the way. Yes, debit depreciation, accumulated depreciation. Okay? So included on my income statement is 6 that's the gain. Do you agree with that? But it is not part of operations. That's included in net income. You see that? It's included in that net income number, isn't it? On the income statement there, that 63,000 includes that 6,000 gain, doesn't it? But it's really not part of operations. It's really part of what? Investing. What do I want to show under investing? The 26,000 cash that I got, right? This is from plant and equipment, so that's non-current asset, right? So let's write down sale of, was it equipment or building? What did we sell? Equipment, okay. So sale of equipment for 26,000. I want to put the whole 26 in here. And it's a debit to cash. You guys agree with that? I have more cash. But that's too much for explaining this change of 20 that I've got here. You see that? It's 6 too much. So what I do is I deduct the gain over here. And that gain on the sales of the equipment of 6 gets deducted. It's not that a gain gives you less cash, it's that I want to show the cash under investing activity. So I put the whole 26 under investing activity, but I don't want to double count the gain because that 6 is included in the 26, the gain's included in the 26, but it's also on the income statement. I double counted the 6,000 gain. You see that? So what I'm doing is I'm deducting it to get rid of it. That's all. But the key thing is the difference between this 6 and this 26 is the 20 that I'm explaining change in that account. That's the toughest thing to get your head around here. Okay? So then what? What must have happened to plant and equipment otherwise? If you started with 500, you took 30 out of there, right? 500 less 30 is how much? 470. 470, right? And now somehow there's 620 in there. How much more do you buy? 150. Is that 150? Is that right, guys? I can't do that complex. It's 150, isn't it? Wouldn't that be debit, plant, equipment, and credit cash? Pretending everything runs through cash. In real life, we get a little more complex than that. If it's a mortgage and stuff, we handle it separately. Okay? Or more stock issue for it. So 150, what do we do here? Cash. Guess what I want to put on my statement? Cash flow statement. The cash, right? Where do I put it? Investing, because it's a non-current asset, plant, and equipment. Purchase of plant and equipment. You like it? How much? You get more or less cash if you gave them the cash. Okay, remember we're doing cash. We're not doing equipment, right? We're doing what happens to cash. It's cash. Yeah. So now we're done with plant and equipment. You see we've done it, both sides of it? We've done the 150 and then we did the 30 both. Okay? We still need to finish accumulated depreciation. What do I need? It's a 130 credit balance and it goes up to 165, but I took 10 out. Taking the 10 out made it 120, right? Now it's 165. How much should I put in? 45. We are brilliant people. It's credit accumulated depreciation, right? It's debit what? Well, come on. Credit accumulated depreciation as you record your depreciation expense. Yeah, this is depreciation expense. That is a non-cash expense. You guys agree? Now, I know there's no cash in that entry. So you think, well, that doesn't go on the cash flow statement. But here's the deal. On your income statement, when you look at your income statement and that net income is $63,000, is it less by that $45,000 depreciation expense? Yes. Where's the depreciation expense? It's probably split between operating expenses. Maybe it's all in operating expenses. That 216 operating expenses includes 45 depreciation expense. Or it could be in cost of goods sold if it's a manufacturer. You do that in accounting 102. Okay? Some of it could be in there, or all of it in there. Maybe it's split between the two. Some in cost of goods sold, some in operating expenses. In any event, that whole 45,000 is on the income statement. Got it? So therefore, what I need to do is add it back. It's not that $45,000, it's that 45 there. I'm explaining the 45 change in accumulated depreciation. It's not that is cash coming in. There's no cash going out. The net income has it out of it, right? So I'm just adding it back to get the cash basis. Make sense? It's a non-cash item. So all the non-cash revenues and expenses we have to add back or subtract out to figure which direction we're going. That's the only one I'll give you, okay? Other than the gains and losses on non-current assets. Okay, well now you know what? We can check off both plant and equipment and accumulated depreciation. We're in good shape. What do we have left? Yeah, we have the long-term liabilities and the equity. Now, deferred income taxes is a little different. It could be treated as financing, or it could be treated as part of operations. The author of these questions is going to show it as part of operations, right? Which is fine. You can do it the way they do it. That's commonly what's done. Okay. But if you do it the other way, I'm okay with it too. If you want to treat it as a non-current liability. So this is gonna be financing stuff. Why do I wanna put all these things under financing? Because they are non-current liabilities and it's where the financing comes from, okay? So let's do bonds payable first. Does it say anything about bonds payable down at the bottom? Nope. So what do I know about bonds payable? It went from 100 up to 190. Bonds payable with no other information. I know that it went from 100 to 190. What must they have done? It's to me like they borrowed 90, right? Debit cash, credit bonds payable. Would you guys agree with that? So what's that? Issued bonds. Am I right? 90,000. I have more cash because I did that. You guys agree with that? That's it. Now, how about though if they issued 200,000 and paid back 110? Could that have been the case? Instead of that 90, could I have over here 200 and then have over here 110 and still have 190 at the end? Yes. What if I did that? Then I would show issued bonds 200, less bonds retired 110. I'd show it on two separate lines. Why? Because they're big transactions. So just like I did up here, I showed both the sale of the equipment and the purchase of the equipment, even though they both hit equipment and accumulated depreciation, plant and equipment accumulated depreciation. I do the same thing down here if I had them going in and out. That makes sense? Show both, because they're major transactions. They're big. Okay, but I think that's all you have to do for bonds payable. It didn't give us anything else. Okay, on deferred income taxes, here's what happens with deferred income taxes. It went up by 4, which is sort of a permanent borrowing from the federal government. What's my income tax expense for this company? Look on the income statement. What was it? 27,000. See it? What they did was they debited tax expense for 27,000. They credited tax payable for the full amount of the tax that they're going to give the IRS. Well, you know, the expense is 27, but I am going to defer deferred income tax payable. I'm going to defer, what was it, 4,000 it went up by? I'm deferring 4. So on my tax return, I'm just giving them 23. So what's happening here is maybe I'm using straight line depreciation for my financial statements, but I'm using modified accelerated cost recovery system, remember that, for my tax return. So I have more depreciation expense on the tax return than I do on my financial statements. This is a wonderful thing, because I tell the world I'm making money, which I am, right? And I tell the IRS that I made less because they let me deduct more depreciation expense. I like this timing difference. I'm not paying 4,000 in taxes now. I'm going to pay it sometime in the distant future. You like that? Defer the taxes. Interest-free borrowing from the federal government. Not some, okay? Interest-free borrowing from all of us taxpayers. That's what you think of it. It is, right? But it is. It's okay. But it encourages people to buy assets. So, okay. Anyway, so the point is, this deferred income tax payable didn't take any cash, did it? The tax payable does take cash, because what do I do then? I debit the income tax payable for the 23,000 and credit what? Cash for the 23. So that 23 ends up going out of cash. Right, guys? Everybody agree with me? Staying with me? Okay, so yeah. So this is what I paid out. This is what I have on my income statement. See the difference is 4? And the 4 is the increase in deferred income tax payable. If deferred income tax payable went down, it had the opposite impact. Okay? So what I'll do is I will put down increase in deferred income tax payable. That's what the opposite is. So I have 4 more cash than my net income implied, right? Because my tax expense on the income statement is 27 and I only paid out 23. Okay? Another way you could do it if you want, you could treat it as a non-current liability and put it down here under financing. If you want to put it down here under financing, that's okay with me, I'll give you credit either way. Because it's really a non-current liability, that'd be fine. And I'd still say increase in deferred income tax payable, but instead of putting it up here, I'd put it right down here, okay? Only put it in one place or the other, right? Otherwise you won't be in balance. Now we can check off deferred income tax payable. Now that one kind of turns your brain inside out too. Okay, so let's add one other thing. Let's do common stock. It went from 275 to 335, and they say nothing about it. Common stock goes from 275 to 335. What must have happened? And this would be common stock and additional paid in capital for common stock both, right? Made it simple, gave us one. I guess it's no par stock. There's no additional paid in capital, no par stock. How much you go up by? So what must we have done? Everything's for cash. Credit common stock, debit what? Cash. Where do you put it? This is a major source of financing. So here we go. Issued common stock. What if common stock went down? We must have retired common stock, bought back treasury stock, right? So I have less cash. Or whoops, I'm sorry, more cash. Debit cash, credit common stock. Got it? If I retired it, obviously I would debit common stock and credit cash, right? Put brackets around. Everybody good? That one's done. You can check off common stock. What do we have left? Retained earnings. Retained earnings started at what?
90.
By the way, do you have to know if these are debits or credits if I just put them in a column? Well, yeah, but you know what? Why those in equity or credits, assets or debits, no big deal. Okay, and then what? 120? Looks to me like net income must have been at least 30, right? Because net income is how we're going to increase this. But we also might have done what? Declared a dividend. Okay. Well, what do I know about net income from the income statement? Yeah, so here I forgot net income goes first on my cash flow statement, but now I remembered on it. Even if I do it the last thing. Net income is 63. We have to put it in there. It's the first item up there, of course, right? So that's 63 being up here. If every transaction of revenues and expenses was for cash, debit cash, credit revenues, debit expense, credit cash, I would have 63,000 more cash because I have net income. That's the idea. But then I'm adjusting that accrual basis income by all of these things to, all of these all the way down to get to cash basis. Got it? I'm adjusting to figure out how much cash I got from operations instead of net income. I start with my net income to do that. This is called the indirect method. The author talks about the direct method. Don't worry about it. The author says very few companies do that. And they claim they don't do it because it's more difficult. They have to do more record keeping. We're using computers. I could convert this thing by hand on a little statement like this in half an hour. I think General Motors could do it, right? I think GE could do it. They just don't want it, right? I don't know that it has any information, or much information, if you use the direct method. The indirect market. Almost everybody uses the indirect. Okay? So that's what I'll have you do. All right. So what's left? I didn't finish retained earnings yet, did I? That doesn't explain the 30,000 change, right, guys? So what else do I have?
Dividends.
The dividend. It has to be how much?
33.
Yeah, that would have made it 153, wouldn't it? 90 plus 63. So it's got to be 33. Now, in the problem, I think they gave it to you.
Yes.
But do we have to give you that? Of course not, right? You can figure it out. I don't even have to give you the net income if I gave you the dividend, right? If I did, for all the way through, when you're doing the final, if there are four, there's two credit, there's a beginning balance credit, an ending balance credit, a debit for the retained earnings, dividend rather, and a credit for the net income being retained earnings. If I give you three of those four, could you calculate the fourth one? Remember that for the final. Write down everything you know, solve for what you don't, and you're there. All the time for journal entries we do this, okay? What was the transaction? What must have happened? Okay, so that dividend of 33 has to go someplace. Where do you want to put it? Transaction with equity holders, dividend, was it paid?
It was paid.
Yeah. If it wasn't paid, what would you call it? Declared. It was declared. Yeah, okay. But yeah, it's still payable probably then. And if it's a dividend payable, it'd be up under current liabilities too, by the way, right? Okay, anyway, so how much is that? Do I have more or less cash if I credited cash? Debit retainer and credit cash. Ta-da! And you know what? Now you can check off that account. Now that you have checked off every single account on the balance sheet, you wrote down the change in each account once and only once. What can you do now, guys?
Your cash.
Add them up. Okay, this is going to be called total cash flow from operations. Don't look at the answer. Let's do it ourselves. Make sure we did it right. This is going to be total cash flow from investing activity. Okay? And this is going to be total cash flow. I hope yours looks better than mine. It probably won't. It's amazing to read these things. Financing. Okay? And then we're going to add up those three sections to make sure it's -8, which is the decrease in cash. Right? Add those up. This will have been a good way to spend your hour. I bet you. I bet you it's going to pay off. I guess this one wouldn't be too bad to watch on the video, but it's all on one page. For all of you people watching it, I hope you're really enjoying our brilliance today. All four of us. This summer, I'm not going to be able to be in here. This room is preoccupied or something. So we're going to be in here. These are old videos, I guess. That ought to really drive people crazy. So you got some numbers? The big mistake that I make here is I don't put brackets around things. I should put brackets around, and, do put them around other things. When you get done, if it doesn't all add up, you could divide by your amount you're off by 2 and see if you've got one screwed up. You have one. Oh, it worked to -8 total? Good. Okay, what was the total cash flow from operations?
39,000.
39?
Mm-hmm.
Okay. Positive?
Yes.
Okay. What is it from investing?
-164.
And what is it from financing?
Positive 117.
Okay. So now you're telling people what happened in the company, right? So what's 39 less 164 plus 117? Is it -8? That it was, right? Does that match the key? Hey, it's a miracle. We're good. You did the way the author did. Okay. So what really hangs you up doing this stuff? I think plant and equipment. That's the big one. And gains and losses will get you. It seems strange. The gains you deduct, but remember you're deducting the gain because you're double counting the gain. I've got the gain included in net income, and I also have the gain included in the cash proceeds, don't I? Right? So I got to get rid of one of them. That's why I'm deducting. If it was a loss, it'd be the reverse. I'd have to add the loss, right? Because I want the loss reflected over under investing or financing, wherever it goes. That's it. You can do it. Try working the other one we did in class. And then later, when you're getting ready for the quiz over the weekend, work them both, right? And then work a few problems in the book. It'll be fun. Without the plan. Yeah, it's going to be one or the other, or some hybrid between the two. Yeah.
We'll get about how long do we get to do the one problem for the quiz?
Oh, I don't know, half an hour, probably. Yeah. We'll probably do it for a half hour or 40 minutes, but then on the test, you want to be able to do it in 15 minutes. You know what I mean? So that's all right. Now, I don't think it's unrealistic to take twice as much time on a quiz to do something and give you half as much on a test. It's supposed to be cumulative. You're supposed to be learning it. You're supposed to be getting it wired. The nice thing on the final is I'm going to give you basically 2 of the 3 exams, right? 2/3 of the questions from the 3 tests, basically, with numbers changed a lot what it is. And you've got 3 hours to do it instead of 50 minutes. It's really nice.
Do most people take the whole 3 hours?
Almost everybody does. But most of them are double checking answers. Yeah. They're done, right? They're checking through it. Yeah. Some people get up and leave. Some get up and leave after an hour or two, but those don't.
What's the lowest grade someone's ever got on a final?
Close to zero. I've had a few sit for 3 hours and get 20%. It's really sad. Did I tell you guys about the guy that was copying homeless paper all through the class?
Oh, yeah.
Yeah. She got up and told him to knock it off. That's the lowest score I had in a final. It was 0. He took his paper with him. I guess it wasn't a 0, but he did get his F. So. I don't give very many Fs. Almost never. Almost never. Everybody drops. We have liberal drop policy. I believe in that, by the way. If you get a job and it's just not working out very well for you, you're not doing well because you don't like it, or you don't like it because you're not doing well. I don't know which one of those is first. You know what I mean? When you take on an activity and you're just not very good at it, sometimes you don't like it. Or maybe you don't like it and that's why you're not very good at it. You don't try very hard. Yeah, I mean, it's just human nature. It's not that big a deal. You just do something else, right? Find another way. Find something else you do like to do, something you are good at. That's not the same thing as saying I'll never do anything else like challenge. So you gotta want it, right, too. So there's nothing wrong with working hard at things, but, you know, just relax about it. But anyway, yeah, people bail, and you notice we've lost, I don't know what percent, but it's big. It's at least 30 by now, maybe 40, get closer to that. And that's pretty typical in the principal's class, even at Belleville. And it's not because people aren't smart or good, it just didn't work at first. Like you guys have worked the whole time as much as you could have, right? True of all of us. True of all the time. So, but the cool thing is there's 340 points left, right? Out of 700, half the points you still count. So you can throw away those crummy quizzes you had earlier if you do great on these last two. And why not? Why not get 20 on this one and the other one's a take-home? Yeah, why not? Yeah. I'm sick of you people. Go away. Thanks for spending the hour. Unless there's a question. Look pretty easy. Not bad. It's just think your way through it and then relax.